They say history repeats itself, but when will big businesses learn their lesson? What's up everybody, I am Jaspreet Singh and welcome to the Minority Mindset. After the 2008 crash, United States taxpayers paid $700 billion to bail out big banks and businesses through a program called TARP. Taxpayers were reassured that big businesses learned their lesson and that we would never have to bail them out again. Well, now in 2020, it's happening all over again, and you, me, and other taxpayers will be paying way more than $700 billion for these big bailouts. Just like we've seen happen time and time again, some businesses got just a little too greedy. Companies like American Airlines are making a killing, and then they gave every penny they had, and some by going into debt, to their wealthy owners to make these wealthy owners rich, and now, because they have no savings, they are demanding a taxpayer-paid bailout. Look, I'm an investor and a business person. I want to see my businesses grow and I want to see my investments win. But if I make a bad investment, I don't expect you to come and bail me out. Unless you really want to. I'm not going to stop you, you know. That's why today I'm going to be talking about something that doesn't make me very happy. Financing Gucci clothes? Close, but no, I'll save that topic for a different video. Today, I'm going to be talking about bailouts. So make sure you watch this video until the end, because in the end of this video, I'm going to be talking about the hidden cost of bailouts. But before we get into that, hit that thumbs up button below, because if you don't, then YouTube doesn't show our video to anybody else. Subscribe to the Minority Mindset YouTube channel. That way you don't miss our new financial education videos every single week. And hit that little notification bell too, because if you don't, then YouTube doesn't let you know when the new videos are released. First, let's talk about who's getting bailed out during this 2020 crisis. The industry getting the biggest bailouts is the travel industry. So these are your airline companies, your hotel companies, even your aviation manufacturing companies like Boeing. But that's not all. Banks are getting bailed out too, just not directly. You'll see what I mean in just a minute. Lots of airline companies were making a killing over the last few years, and then many of these airline companies spent all their cash or most of their cash on stock buybacks, which helps to artificially increase the value of their stock price, which makes their owners richer. When a company has extra cash, there are three things they can do with it. They can save this cash to protect them from emergencies. They can invest this cash into their business to help their employees and help grow new divisions. Or they can reward their owners for making a smart investment. A good company should do all three. You always want to have savings to protect you from an emergency, because you never know what's going to happen. You should always want to invest in your employees and your business and grow. And you should reward your owners and investors for making a smart investment. Although I still don't like stock buybacks, because all you're doing is artificially inflating the price of your stock. I would much rather prefer dividends, but I guess that's a topic for a different video. But when a company spends all their extra cash or even goes into debt to make their owners richer through stock buybacks like some airline companies did, that's when you run into problems. It's kind of funny. Over the last few years, airline companies spent $45 billion of cash they had sitting in their bank account on stock buybacks. And now, because they have no savings left over, they need a $50 billion taxpayer-paid bailout. I guess that's really not funny. I should really work on my jokes. It looks like if airlines used this extra $45 billion of cash they had a little bit better, they wouldn't need these taxpayer-paid bailouts right now. But what do I know? I mean, I'm just a random guy on YouTube, even though I thought we learned this exact same lesson during the 2008 crash. But what's even more interesting than these airline bailouts are the bank bailouts, because you might not even heard of these bank bailouts happening. I say that banks are indirectly getting bailed out because the United States government passed a $2 trillion stimulus package, which includes a big chunk of money going to bail out businesses, but you're not going to see many banks going after that bailout money. If banks went out and publicly asked for bailouts, that would hurt their image, especially what happened after the 2008 crash, so they didn't want to do that, so the government and the Fed got creative. Banks are indirectly getting bailed out because the Federal Reserve Bank is printing an unlimited amount of money to buy investments from these banks, which have a fair market value of nothing. I'll show you what I mean. By the way, the original plan was for the Federal Reserve to buy up to $700 billion worth of these investments, but then they realized that $700 billion wasn't enough, so then they changed it to an unlimited amount of investments. If you're already subscribed to our free Minority Mindset newsletter, you've heard us talk about this. Big banks over the last few years had spent hundreds of billions of dollars buying up big packages of corporate loans as investments called corporate bond funds. You can think of this corporate bond fund kind of like a package full of a bunch of different business loans. Well, this 2020 economic crisis really exposed how cash poor and over-leveraged businesses were, and so when businesses didn't have the money to pay their loans, that's when these corporate loans became worthless and these corporate bond funds became worthless too. And so now you had big banks holding on to hundreds of billions of dollars worth of these investments, which were now worthless. I mean, if I lose $100, I don't feel good. So I can't imagine what it would feel like to lose hundreds of billions of dollars. If you invest your money and your investment loses money, that's a risk you take of investing your money instead of saving it. I mean, you're never guaranteed to make money when you invest. You might even lose money. Well, the Fed and the government felt that if banks lost a lot of money on their investments, then that would really hurt the banking and financial industry and too big to fail, and you already know the pitch. But instead of the government giving banks a typical bailout from our stimulus package, which would probably be frowned upon, the government and the Fed got creative. The Fed created an indirect bailout because they said that they would print hundreds of billions of dollars, if not trillions of dollars, to buy these now worthless investments from the banks for top dollar. So you give me a pile of crap and I'll give you $1 billion, and this plan is paid for by you and me, taxpayers. So these indirect bailouts let banks sell their worthless investments and get them off their books in exchange for a whole bunch of cash, and they get to continue running business as if they never made a bad investment. And the best part of all is that this isn't even called a bailout because the Fed isn't bailing them out, they're buying investments which are worthless. Oh, you sneaky. Before I get into what this actually means and the cost of these bailouts, if you do want to stay up to date on what's happening in the finance and business world, we have a free finance and business newsletter where our team first breaks down the top finance and business news, and then we show you how this news affects your wallet. That way you can be smart with your money, and we email you this daily newsletter and you can read it in less than 5 minutes every single morning. So if you want to get a free finance and business news, you can do it by clicking the link up here or by clicking the link in the description below. The whole idea behind a taxpayer-paid bailout is to protect a business that's too big to fail from, well, failing. The argument is that if a huge business fails, then that would have a devastating effect for the economy and lots of people would lose their jobs. That sounds good in theory, but these bailouts can do more harm than good because beyond just the cost of paying for these bailouts, there's a hidden cost with these bailouts too. Let's look at it this way. You and I are playing a game and you have two options. Option one, I flip a coin, and if it lands on heads, I pay you $50, and if it lands on tails, you pay me $5. Option two, I'm gonna flip a coin 3 times, and if it lands on heads all 3 times, I will pay you $500. But if it doesn't land on heads all 3 times, you have to pay me $500. Option two is more risky, but you also have more upside potential. Option one is less risky, but your upside potential is less. The risks are clear and you have more to gain with option two, but you also have more to lose. Well, what would happen if you selected option two and we start playing and I flip the first coin and it comes out as heads? Now you're really happy, and then I'll flip the second coin and it comes out as heads again. Now you're really excited because you're just 1 coin away from winning. And then I'll flip the third coin and it comes out as tails. You just lost. But now I feel really bad and I say, oh, it's okay, you don't have to pay me $500, and here's your $500 anyways, even though you lost. If it happens once, you'll feel good and you feel really lucky. But if it happens again and again and again where you lose and you still get rewarded, you're going to realize that there's no reason why you shouldn't take the less risky option, because even if you take a risk and lose, you still win. That's the hidden cost with bailouts. Big businesses don't have to pay the price for making a bad investment, and it encourages reckless risk. Now, I know what you might be thinking, but Jasprit, what if the business fails? Then all the employees are going to lose their jobs. Well, as a licensed attorney, I can tell you that if you're in the United States of America and you fail as a business, you get to file for bankruptcy protection because America says you can file for bankruptcy, and if you file for bankruptcy, that means that the business doesn't just disappear. Most businesses, when they fail, will file for what's called a Chapter 11 bankruptcy, which means the business will get to stay in business, the employees will get to stay employed, but some things will have to be restructured. That means that three things will happen. That means one, businesses are gonna have to call up the lenders and negotiate a deal with them where, yeah, sorry, some wealthy banks aren't gonna make all the money they thought they were gonna make from the loans that they made to this business. Two, the investors who invested money into the business are gonna lose money. If it's a big business, then the biggest investors are probably big wealthy banks and big wealthy institutions. So yeah, your wealthy hedge fund CEOs might not make as much this year from their bonuses. Of course, you're gonna have your fair share of regular people who invest in the company as well. So these are people that own a couple hundred shares or a couple thousand shares, but that's a risk you take of investing your money. You're not guaranteed to make money when you invest, and you might even lose money. And that rule applies, or should apply, if you're investing a couple $100, or if you're a wealthy hedge fund investing a couple $100 billion. And third, businesses will be forced to make better business decisions because now the executives' positions are on the line, and so are their big bonus checks. The reality is bailouts breed market unfairness. If you are picking and choosing who gets a bailout check, then for one, you are encouraging bad business decisions instead of discouraging them. And two, it encourages corruption, because if I know the government has my back no matter what bad decisions I make, well, then I just need to make sure that I keep making my annual donation, and then I can go out and take whatever risk I want without caring because I know that taxpayers have my back. All while at the same time, you have tens of millions of people around the country who don't have the resources to pay their rent, to pay their mortgage, to pay their bills, to buy food, and they get left with a bill for these bailouts. Don't get me wrong, I love entrepreneurship, I love business, and I love investing. It's what I do for a living. But some businesses deserve to fail. The strong survive and the weak don't. Those were the original rules of the game. Can it be harsh? Yeah, but that's how it works for regular people and every small business out there. Thank you for watching. If you enjoyed this video, share it with one friend, that way we can help spread the word. If you want to learn more about what you should be buying to build wealth during a recession, I already made a video on it, and you can watch this video on YouTube by clicking this button right over here. Thank you for watching, and as always, keep hustling.